Well, today is Tuesday, the 25th of November, 2008, and the market finished with a slight loss here for the Qs today. They were down 13 cents, or about 0.5%. But you can see that we did maintain above the prior support level that had been broken late last week at about that $27.30 level. So all's not lost here with one slight down day. We've had a real strong rally the last couple of days from Friday's lows to this morning's highs. At least in the S&P 500, it was about 17% so far. Looking at a 10-minute time frame of the NASDAQ, you can see it was pretty tight range in here, and the support that I'd mentioned at $27.50 did hold. I was hoping that maybe it would break down very briefly here during the day and kind of trap some shorts and get some people to get rid of their long positions. Then we could probably test, I was thinking, the 27.30 level and that 5-day moving average, but instead the buyers came in here at the close. So perhaps they're telling us that the buyers are a little bit more impatient than I was expecting. The inverted head and shoulders pattern that seems to be developing is potentially, form this right-hand shoulder. If we were to get a tradable move off there, you could take the approximate height of this pattern, which we could call just about 3 points, add that to the 28.75 level that it would break from, and that would give us 31.75. I think 31.75 is a little bit aggressive because, as we had seen yesterday, the volume-weighted average price since the October breakdown was right here at about $31. So I think that's going to be most likely an obstacle for this market, but we are seeing some encouraging signs, so we want to remain open-minded to the possibility of further upside, but be mindful at the same time that we are in a primary downtrend. The downtrend line that was broken from the election high right here yesterday did hold, I guess, as trend line support during the day as well. We are above the 5-day moving average, so there are some good things happening here in this market. Negatively, I guess you could say, is that the volume's diminishing in here, but again, only price pays. I think that if this market can hold above $27 here over the next several sessions, then we might be poised for another leg higher that could lead to a pretty nice gain, actually. So this still has the possibility of being a larger bear trap, as again, the S&P 500 had made a 12-year low underneath there. The semiconductors were at that 14-year level, and we've seen some real damage done in here. So let's take a look at oil. It was, like I said yesterday, if you're looking to trade this thing, do it with very, high risk money, and I think the best way is DXO. But there's really still no reason to be a purchaser in here. It's as I said yesterday, clearly still in a downtrend, and this actually this was the level we were looking at, that this prior support had the potential to act as resistance. The market gapped lower today. It's below the 5-day moving average, so maybe it forms a higher low. The 5-day moving average flattens out, and then it begins to rally. It's still early to take any positions. Any positions that you're taking long in there are very speculative. Anytime you go against the primary trend, it's more, it's a risky trade. But when you have that 5-day moving average still declining, it makes it even riskier. So just be mindful of that. The Russell 2000 was actually the strongest. It was up 1.6%. They closed pretty much right near the highs of the day here, and you can see that like the rest of the markets, opened strong, pulled back a little bit, held above this support here. We were looking at maybe the 43 level, and then 42 below that with the 5-day moving average as well. But this market held up much stronger, and again we saw a real nice push towards the close there with some volume. So the Russell 2000 is acting more bullish. We've got that downtrend line that has been broken now. Yesterday we'd seen that in the Russell 2000 hadn't been broken. The Fibonacci were right at that that 38.2%, or about a third retracement of the election highs to the recent low. And if we take a look at the the Fibonacci off the Qs, we can see that it's the 38.2% level that we're still below as well. Taking a look now at the semiconductors, they were a little bit weaker. They were down 2.8% today. So this market, you want to see this rally to give you confidence in the Nasdaq, but right now it's not. But I don't think it's all is lost here for a potential turnaround scenario. In fact, I would have preferred the rest of the markets did something along the lines of what the semiconductors did, which was come down and touch upon this 5-day moving average a couple times. And you can see that 5-day moving average is starting to flatten out. So I think $15.50 is going to be important tomorrow. Tomorrow we have a full day of trading. Thursday, no trading. Friday we have the New York Stock Exchange and the Nasdaq, for that matter. The markets close at 1 p.m. Eastern. So Friday's a half day, full day tomorrow, and no trading on Thursday for Thanksgiving, of course. The semiconductors, though, if they can hold this 1550 level, then perhaps you want to look for a bounce in here up towards the prior lows near that $17 level. If I were to play this, I would be playing it with the USD, which is the double long ETF in there. The financials today were up 65 cents, so they held better than the rest of the market. Early during the day at 11, when it hit this 1160, I suggested on Twitter that there was a good little trade potentially coming via the SKF, and it rallied about 8 points or so. So there were some opportunities to grab some profits in that on the short side. But it's impressive to see it got back above VWAP, and of course the financials are the group that everyone's watching right now and have been watching for quite a while, because they've been the root of this problem. This downtrend line has been broken. We're holding above it. As far as important support in here, 10.5 is important because that's where we have that 5-day moving average. Prior to that being important, though, I think at about 1110 to 1115. You want to give it a couple pennies below there. But we've got these higher highs. You can look at this as a higher low. Now it needs to push past that level to continue to see some strength. And the $13 level is going to be a potential area where we find some supply. That had been, of course, a prior important level as far as support right here that had broken about $12.80 to $13. So we're getting extended here over the very short term, but the market holds up very nicely so far. The signs aren't there to be a short seller yet, other than for very quick scalp trades. The S&P 500 was up 87 cents, or 1.02%. So it's good to see that we're getting a little bit of a cushion from these important lows near about 83.45 or so. So we're now about $1.50. $2.50 above that level, and if we see a pullback towards that level, then perhaps there'll be a buying opportunity. We've got the 5-day moving average down near 82. That when the market expends as much energy as it has here from the Friday lows to the highs this morning, again, that's 17%, and that's the 8th time we've seen a rally of at least 10% this year in the SPY. So and every single one of them prior to this has failed. So keep that in mind. But we're setting up a little bit more bullishly. You can see that from the election highs in here, that the Fibonacci, the 38.2% retracement is down here, and we're actually kind of getting up towards the 50% retracement. The downtrend line, again, this has been broken, and market seems to be wanting to hold above it. This low will be important near about 83.80, and then of course we have that 5-day moving average. There's still no reason to be a super aggressive bull in here, as all the trends remain lower, but this is turning into a pretty good tradable bounce, and we're in a trading environment, so just always manage risk first.